Hey there, folks. Happy Friday to you. Hope you're having a hope you had a fantastic week, and I hope you have a fantastic evening. Coming at you with this week's market wrap. Thank you, Janet Yellen, for keeping the party going. What a fantastic week we had this week, and it was really primarily because of the dovish Janet Yellen, who, really, I think took the street by surprise how dovish she was, being that we had for the entire week prior uh, other Fed members jawboning up the fact that we were looking at a potential rate hike as early as April. And then Janet Yellen came out and just, threw water all over that that suggestion, and we got a pretty strong rally. And then today we got a strong jobs report, which I will still tell you that I think is suspect. I want to be bearish. I'll just tell you that right now. I really want to be bearish. However, it's impossible to fight the Fed and fight the momentum that we currently have in the markets. Now, hopefully, you follow my blog throughout the week. Last week in the market wrap video, we did talk about the fact that, we were coming up to areas of logical potential resistance where we may see some type of a pullback. And I even had a small starter position in SPXS in the anticipation of a potential pull. And when Janet Yellen came out with her extremely dovish statement, I dumped that SPXS immediately and got out flat because I'm not going to fight the Fed. So you look at the NASDAQ, we were coming up into the 200-day moving average, which could have served as potential resistance, and we wound up slicing right through it. So on Friday, today, this morning in my blog post, and hopefully you follow the blog post every day because as things develop, my sentiment changes with whatever's happening in the market. And today I put out on my blog post early this morning that the action in the IBB was fairly interesting. And if you think about this from some of the big hedge funds or mutual fund guys or the guys that have missed the bulk of this rally that we've had in the markets, if they're looking at the markets and they're looking at these sectors that have already had these tremendous runs, it's difficult for them to put any money to work there. So where could they look to put money to work? Well, that would be in the IBB, right? And this is the BIB, which is a pro long biotechnology ETF, right? And if you look at it, it's broken over the short-term trend line. It is coming up into some moving average resistance here, but it's got a long ways to go just to come back up and test this longer-term trend line, right? That could be a pretty significant move. And if you think about it, that sector has been so beaten up that it would be a logical place for some money to flow. And it seemed like every day this week we had some type of small cap biotech name flying, right? Making some tremendous moves almost every day this week. And what we really need to have happen is we need to have Biogen IDEC, Gilead, Celgene. We need those guys to start making some good moves. And that could be really good for the IBB and lift that whole sector. So definitely something that we want to kind of pay attention to next week. We talked about it last week about, let's go to the IBB right now. We talked about the IBB, you know, where we would get really kind of positive on the sectors if we could take out this 270 with conviction, right? If we could take out 270 with some real intensity, that could be a sweet spot to be in over the next several weeks. So definitely worth keeping an eye on. So we get a strong employment number. One of the things we talked about was the strength of the dollar. And, the dollar just continues to weaken, but it is in an interesting place where it could potentially find some support here. I mean, it pierced this, basically 24.50 and bounced. Maybe it comes back up into this trend line and then pulls back again, or maybe we take out that trend line and start to move higher. But you definitely want to keep an eye on the strength of the dollar. And the other thing we want to keep an eye on is oil. Now, it's pretty interesting. We were so connected to oil and how whichever direction oil was moving, that's the way the market was going. And actually, oil moved down basically every day this week, and the market was extremely strong. So we seem to, at least for now, have decoupled from uh, being attached to whatever oil does. Okay. So let's go back to some specific sectors, take a look at some things here. CIBR, the cybersecurity space is actually holding up fairly well. It's had a pretty tremendous run. It is coming up into potential resistance, but it looks as though it's consolidating before it maybe tries to at least test this longer term trend line. CIBR and HACK both look very similar, and I think it's worth uh, continuing to watch. Actually, HACK has already broken this long-term trend line and now consolidating like it wants to go higher. So the cybersecurity space could still be in play, could still be an area that you want to pay close attention to. We did get a pullback in gold this week, and actually what I'm kind of looking for with gold is, you see this gap here on the daily. I'm thinking maybe we come back and fill that gap on the daily, and this could act as potential support right in that 112 area. But I really, I do think we've made a significant move in gold. Um, we broke a major long-term trend line. Let's back it out to the weekly here. We broke this trend line fairly convincingly. So, it's not unusual to see us have a bit of a pullback. But, we were making all these lower highs and lower lows, and now, we've kind of broken that trend. So it'll be interesting to see what happens with gold over the next several weeks. But I don't think that the move in gold is done. So, gold and gold miners, they may take a breather, but I think you still want to pay attention to the sector. Let's take a look at the IWM small caps, which, 110 was the area that I was suggesting we wanted to see us take out 110, and we actually closed over 110 today. So now what I'm looking at here is potentially, so we've got this long-term trend line, right? And we've got this gap to fill on the daily, which those two look like they may coincide. So you've got this wall of resistance potentially right here at around 112, 113, right in that area. Now, and you have the 200-day moving average, right, which you can't see because it kind of blended into this trend line right here. So there's a pretty significant wall overhead in the IWM. And as you know, that has been, the small caps have been pretty concerning to me. Also because of the fact that we got this T2108, the stock percentage of stocks above their 40-day moving average, that is up in the stratosphere in the in the 80s. So look, I'm very skeptical of where we are, in which I think a lot of people are, and what could happen is we just continue to grind higher, right? I mean, I don't know that we're going to go parabolic, but we may just continue to grind higher or suck some people in. You know, everybody seems to want to be able to go short, and at the first sign of any weakness, people start to pile in, and then bam, we get a snapback. So it'll be interesting to see how this all plays out over the next couple of weeks. So IWM is, I think, potentially coming up into a wall resistance, but you know what? We've been saying that for several weeks now, and we seem to just slice right through every perceived area of resistance. IYT. So are there a couple of things that maybe could be, you know, signaling some warning, you know, caution flags? I think caution flags is probably the best thing to say. So IYT, which, you know, kind of let us down when we had the big breakdown, came up into this resistance and now is pulling back a little bit, right? It's not completely breaking down. It's testing the 200-day moving average, so we're just basically pulling back and testing. We'll see if this acts as support or continues to act as support, the 200-day moving average. But this is something to keep an eye on, right? If the transportation sector rolls over, that could be concerning for the remaining markets. Mid caps, you know, we talked about potentially being an area of resistance. It popped right through. Now it looks like it's flagging out. Potentially wants to head higher. SMH, we did get, so let's take a look at SMH real quick. We did get a couple of names that reported some, one was not going to be able to file their 10K, and I think that was Marvell. And then you had Micron, which had earnings that were not all that fantastic, but SMH is coming up into this line of potential resistance. However, it did manage to close nearly at the high of the day. So, maybe we could continue to see strength in the semis, and those two companies that had the news, basically, those are company specific issues. S&P 500, another one where we could be coming up into a fairly significant area of resistance. This 2078 or so. See if we can take that out with conviction. 2080, right, is kind of what I'm looking at as potential resistance. If we break out of this over this 2080, we could easily go back up and test over 2100. So, like I said, very difficult to fight the momentum that we seem to have right now. Volatility, keep wanting to see some complacency come out of the market, see some volatility pick up, get some type of a pull. It looked as though a couple of times that we got a little bit of a pop in volatility in TIVX and UVXY. Really, it was just a bait to get people jumping in, and then they pulled right back. So, volatility is still on the low end, and if we do get any kind of a significant pull, and what will it have to be that would make that happen is maybe some kind of an outside event. But we need to see some fear in the marketplace in order for us to play volatility, and there just isn't any there right now. Home builders, where are they at? Home builders looking pretty strong. Thought maybe we could be coming up into potential resistance here. They do have the 200-day moving average overhead. That could act as resistance. But, clear, nice looking uptrend, and does look as though it potentially wants to head higher. Energy, so with the oil, oil pulled back fairly significantly, and what I think is kind of interesting is that energy, for the most part, held up pretty well. And we've got earnings season that is going to be starting in about a week or so. And that could really, be the defining moment for the markets because earnings do matter. And that could be, the defining moments for the market. Maybe that is what, throws some water on this hot run that we've been on. But I have to say, I am fairly impressed with the way the energy names have been holding up, even though oil has been pulling back. Financials actually holding up pretty darn well, being that we had such a dovish Fed. Uh, maybe this move we had today is a reflection of the strong jobs number and an indication that the economy is getting stronger and it's going to actually force the Fed's hand to raise rates. I'm not sure, but pretty interesting action in the financials. Industrials look really strong. I mean, they're consolidating after a nice big run. GE, I think, was pressing on $32 today. So industrials look really good. And if one of the beneficiaries of a weak dollar would be our big conglomerates and multinationals. So that does make sense. Another space that I think is fairly interesting where money could flow is the healthcare space, right? So we've got the IBB and the healthcare space, which have both been beaten up fairly significantly. And, it looks as though we could be getting ready for some type of a flat top breakout. We will have likely some resistance up here at the 200-day moving average and this trend line. But I think healthcare is something that you just want to keep an eye on. Consumer discretionary, made some. It came right up into this price resistance. $80 is where we could see some resistance, and it looks like we could test that next week. Metals and mining continuing to consolidate after this huge run that it's had. But another one that, if you look at it, we broke this long-term trend line, all these lower lows, lower highs, and now here we are. We've broken this over the 200-day moving average. I think this is a significant trend reversal and just the beginning of a much larger move. XOP, oil and gas production. So, if this one breaks down below 28.44, the one that I would be looking to play, and it was on my list last week, is DRIP. Okay, and let me go back to that real quick. Where are you, DRIP? There it is. All right, so DRIP, if you get a breakdown in the oil and gas exploration, this one I think is one you want to keep an eye on for a potential play to the upside. And let's see what else we got going on. Retail. And retail, so this is just another ETF for transportation. Retail, it also actually looks as though it might be consolidating. We got some consumer confidence numbers, which seem fairly strong. So listen, as much as I want to be bearish, it's really, really difficult to fight the Fed. I think earnings are going to give us a clearer picture when they start in about a week and a half or whatever. But we could have some more, grinding higher until earnings actually start to hit. So for the most part, my thoughts are, it's a quick hit type of market. I think biotech and healthcare could be sectors that start to come to life, and we could get some pretty significant plays in that realm, just like we did this week. And keep an eye on volatility. Okay, I will be doing stocks to watch Sunday morning, 8 a.m. Las Vegas time. If you have a stock that you'd like me to take a look at, tweet me, email me. I'll make sure to get it on the stocks to watch list for Sunday live on Ticker TV. Enjoy the rest of your weekend, and I will see you all, or I won't see you all. I'll see some of you Sunday morning, and I'll see the rest of you next week.